Hey there, I'm with Shane Burns of Academy Mortgage. Thanks for talking today, Shane.
I'm so excited to meet with you, Kelly. It's great to meet you in person finally.
I know, same. And we're up in Great Clayton, Georgia. And Shane, I know you said your mantra for this year is grow with purpose, right? And
Yeah.
so many of you may have a purpose this year of growing your investment portfolio. And so we want to talk a little bit about how to do that. So talk to me about some cool investment loans that you've helped clients with.
You know, what I love about investors is most of my investors are always open to strategy, right? They want to know, like, how's the best way to utilize the money that I have, or maybe the assets that I have, to continue to grow that portfolio of real estate investment. One thing that I've learned through coaching as well, learning about how to best manage our money, is that when you look at your income, are you invested at least 6 times your yearly income in real estate?
Wow.
Because that's the number that we should all be striving for if we want a healthy investment portfolio for real estate.
Generational wealth, right?
Right.
Creating that generational wealth.
Yes.
So how can you do that? And you mentioned taking money from your current property and leveraging that. How do you do that?
So you can do a HELOC. You can do a HELOC. You could do a cash out refinance possibly. You know, right now a lot of folks have really great rates on their current homes and they're scared to touch that. Of course,
Right.
don't if you don't have to.
Yes.
So I get that. We do have, you can do a full second lien, which we have both fixed rate and adjustable rate options. If you're in the game more short term on the HELOC, then you would go with an adjustable rate because you may get a better overall rate. But if you're thinking this is going to be a long-term line of credit that you want to hold on to, then a HE loan may be more advantageous because as you pay it down, it's still there. You can leverage it again. You don't have to reapply. It just is a nice line of credit that you continue to have.
And on, any kind of investment property that you want to go and buy, is a 20% down kind of a requirement on those?
So with an investment, you can do as little as 15% down. If it's a second home, like a personal investment for you and your family, you can do as little as 10% down. So I will say, though, I'll give a little caveat to that typically on any type of investment where you're putting less than 20% down, you are going to have more of a premium on your origination costs. So be prepared for that. And you may want to weigh what looks better at the end of the day to go ahead and put the 20% down, or you're willing to have a little bit more in the origination. The really sweet spot is 25% and more.
Okay.
So at 25% down, you really do get a little bit more advantageous rate options. So if you're very rate minded, then you may want to consider that 25%.
And so that 25% could come from my primary residence that have this equity in, right?
That's right, yeah.
And
Absolutely.
so, if you do have this great property with this low interest rate that you don't want to touch, you don't want to sell it, right? You don't want to give up this great rate.
Right.
Maybe you just want to pull a little bit of the equity out to buy that second home that you've been wanting at the beach or the mountains here in Clayton.
That's right.
And, or are you buying maybe a home for a kid that's going to college?
Yes.
And instead of paying rent at college for 4 years or 5 years in my case, you want to buy a property that's going to appreciate over time. So talk a little bit about that. Like, what does that look like to take money out of your current home for that type of property?
So, with taking the money out, you wouldn't just look at the HELOC, but you're also going to look at, okay, now what kind of loan program am I going to use to buy the house, right? So we have a couple of different options. You can go straight vanilla investing. We do Fannie, Freddie type loan, conventional loan product, which is usually where you're going to see the best interest rate. But let's say maybe you're self-employed, and maybe your employment is such that we all don't want to necessarily pay everything that we make, and qualifying for that investment purchase may be a little tricky based on just your income alone. So what we could do instead is we could look at something like a DSCR loan, which is a debt service coverage ratio loan, and that is going in and basically we appraise the home based on a rental market value and what kind of rent that house would bring in. And as long as it meets certain ratio requirements, then all you've got to do is have good credit and the down payment, and the house has to basically pay its PITI back at least that much, which if you're investing, we can have another conversation about that. But as long as you're able to cover the debt on the home, then you can it's a very, very easy, straightforward process. And you don't have to involve your income documents in order to qualify for that loan.
And is that kind of, we've heard over the years where if you have a rental property, you get to count maybe 75% of that rental income toward your debt to income ratio? Is that the same thing?
Not the same thing
Okay.
at all. So
Okay.
that is, in that case, that is going to be like if you are leaving your primary home and making a new primary purchase, then you can offset 75% of the PITI with, if you're going to retain the primary home with any immediate lease that you would put into place. If it's going to be a short-term rental, you're going to have a 12-month history before you can do that. But if it's going to be a 12-month lease contract, then you could 75% of that can count towards your PITI. Yes.
Shane, like you said, strategy, right?
It's a lot of
But you want to
strategy.
work with your advisor, right? So your financial advisor, we have health advisors, your
Yes.
mortgage loan advisor is going to help you kind of guide you through what's the best way to leverage this for your investment portfolio and to build that generational wealth that we all know we all strive for. So get with Shane Burns. She'll be glad to help you with any of your investing tips.